What's up? I'm Dan Fredenberg, and this is another Chance Encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house. It's going to be torn down soon. I understand that there are power lines that are just kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Nick Heim. Is it Heim, or did I get that
That's
right?
it. You got it.
Yes, Phonics for the win. And I got some great
Success.
news. Yeah, I got some great news for you today, Nick. Today we are joined by my very favorite member of the audience. And why is my audience member here? It's because this is a chance encounter where I interview commercial real estate players. That means buyers, sellers, syndicators, sponsors, operators, all that kind of stuff. And you may ask yourself, why would anybody want to do that? Well, the answer is if you've ever heard of an off market deal or a private deal or a 506B syndication, well, the SEC insists that you have documentation of your prior substantive relationship, or else they will get ants in their pants. And nobody wants that. You got to have that documentation in place if you're going to be syndicating. And the beautiful thing about this show is while I'm interviewing my guest, you're going to find out how to effectively communicate on the subject of commercial real estate deals and how my guest fits into those deals. But before we start talking too much about commercial real estate, Nick, do you want to say a thing or two about yourself?
Definitely. So thank you, Dan. We actually have met on LinkedIn, commented on a couple of each other's posts, but how we got here today, I actually picked up a copy of Dan's Real Estate is a Scam, which has been a great book. As you guys might know, Dan is an engineer by training, not necessarily right now with what he's doing. So it's cool to see people with kind of different kinds of backgrounds. And Dan, your book is awesome for somebody who's trying to learn maybe some of the pitfalls and minefields of commercial real estate. So I appreciate you bringing that out to the audience.
Wow, that was amazing. Thank you so much for that. I barely have words, but I got to continue. So let's go on to the first section here, which is the five distinct motivations. Before I go to the five distinct motivations, I always say, but wait, check your rate. And Nick, you're an engineer. I don't know if you have the technology to see through the camera and down at your 8 o'clock. It's the audience is five, but there might be this hideous subscribe button that people will judge you. Okay, it's a stupid joke.
Well,
And
Dan, if you don't ask, they're not going to hit the button. So you got to ask the question.
bingo, my subscriber count did go up big time when I started doing that, and that was my motivation. But speaking of distinct motivations, everybody who's involved in a commercial real estate deal has some sort of reason that they got involved in the first place with the transactions. And the reason why it's important for us to know what those motivations are is because these deals take months to close, they take years to go full cycle, and so we need to know what exactly is keeping you from just throwing in the towel. And even though everybody has their own unique why, I found that they do fit very neatly into these five different categories. So I go through them in every episode. The first one of which is preservation of purchasing power. What on earth is that? Well, some people, they don't have a W-2, they don't have a regular job, and they can still afford to pay their bills. And the way they do that is because they own a portfolio of assets, and the proceeds of ownership is what they use to pay their bills. Now, if you're already in that situation where you don't really need to work, you don't have a job or anything like that, why would you bother going through the hassle of another commercial real estate transaction? Well, there are a couple of different circumstances where it makes a lot of sense. One is if inflation is eating away from the purchasing power of your cash flow, that's a big reason to make your next acquisition. But the other circumstance is when there's an asset crash or serious distress, so you can buy at a steep discount. That's the other reason why people in this category would get involved in these deals. Me personally, I'm not to that point yet. Where I'm at, which I suspect is similar to Nick's, I realized that as a high salary earner, a high wage earner coming from tech, the fact is you pay more in tax than anybody else. And when I went from my CRM agency to my first real estate job, building these online funnels and helping sending 5 to 7 million emails each month and doing hundreds of thousands of dollars worth of sales in a weekend fairly frequently, what was hitting me is like, how is my boss who's flipping these 10 houses and making all this money, how is his tax burden so low compared to people who have a W-2? So I decided I need to pivot and find a way to be rewarded for my efforts in the form of deployed capital, aka equity. And that way I get to use the equity multiples to build my net worth. So that's what I'm up to. But that's too subtle for some people, or abstract for some people, especially youngsters. More what they're up to is they want to take control of their schedule. Maybe they want to hustle like crazy for now and then retire early. Or maybe they just want to work fewer months per year or fewer weeks per month. Whatever it is, this is a very common reason for people wanting to get into this industry. And I honestly think some people think that everybody is secretly motivated by fast tracking retirement, but I assure you that is not the case. For example, some people are just plain they're really focused on ambition. They want that generational wealth. They want to buy their entire hometown, and they want to make sure that their grandchildren never have to hold a day job. And that is why they're going to be hustling as long as they possibly can to make more of that impact with their own family and leave that legacy. And that's a great reason. But some people, instead of being their family specifically, they've found a sector of society, or maybe it's animals, maybe it's environment, maybe they want to send people to the moon or space or something. Regardless of what it is that you want to do, if you want to have a big impact, there's a financial component to it. And that's why some people are using commercial real estate as the vehicle to get there. So Nick, of those 5 different motivations, what combination of those would you say describes you best?
So right now, Dan, at the stage that I'm in my career, likely the fast tracking retirement. And you mentioned the hustling like crazy right now in kind of a temporary fashion. That's it. That's where I'm at. And I think, as you said, it's great that you provide education to your audience on like, what are your different options and why do so many people tend to land on CRE as the avenue to do it?
Thanks. That's an awesome answer. But of course, even though there are all these nice factors or aspects of the business, it is still a business. Every business has risk, especially in real estate, because you've got environmental, you've got all sorts of different factors that can cause problems. But if you've ever been involved in a 506B deal, one of these off-market deals, these syndications, the securities attorney in the mix should have insisted that everybody fills out this super invasive financial questionnaire, all sorts of wild questions about your net worth, things that most people aren't very comfortable talking about. But when I was going through those questionnaires, I found one question, it didn't really give me what I'd call usable information, and it was the tolerance for risk assessment. So I made my own version of it, which is a fill in the blanks question. There are many popular investment asset classes, but I think blank is too risky. So Nick, it can be inside real estate, it can be outside real estate. What's too risky for you?
So maybe not an asset class per se, but let's talk about some of the things that have been very trendy lately. And I'll just say to you, right, cryptocurrencies and non-fungible tokens. So for me, as an engineer, and I think you can relate, Dan, is if you don't understand it, it's just a no-go. And those are two that I never could quite wrap my head around what exactly the investment strategy was and ultimately what the end play. So I would say those types of trendier investments would be my answer.
And I love that answer because, crypto, it's straight appreciation. It's buy low, sell high. There's no cash flow from ownership. You basically sit on it and hope for the best. So that makes a lot of sense. But as far as what people look at to figure out if a commercial real estate deal is better than crypto, for example, we've got all sorts of different metrics that we can go through. And I got to tell you, when I first started making these episodes, I didn't have this slide in here. This is new for 2024. And the reason is because I was afraid that because some people, they're more of a PR role or marketing, you know, like front of the business sort of person. Those people don't tend to be the spreadsheet jockeys who really like to bear down and do underwriting and that sort of thing. But I found even if you are strictly PR, then you still have one or two metrics that you hone in on, even though the underwriters themselves would say, like, what are you talking about? All 14 of these are important. You can't, like, how do you pick favorites? But I'm still going to ask for your top three. And for anybody in the audience who's listening and not watching, I'm going to read out each one real quick. The first one's cash on cash, then IRR, then cost per door, then net operating income or NOI. Then there's the going in cap rate. That, of course, is especially important relative to the buildings nearby. So it tells you if you're getting a good deal for that location. The next one is the loan interest rate. If you're, it doesn't matter if you're borrowing or if you're assuming, that's a big one. Then the occupancy rate, also known as vacancy rate, they're obviously inverse. Average income in the location where the property is located, amortization period of the loan, the difference between the market rents versus the in-place rents, population growth where the property is located, the sponsor record, which means how many deals have gone full cycle, how many deals are on the go right now, then the waterfall split exit, just what exactly is going to happen after capital is returned. And then the last one I have here is DSCR, which is debt service coverage ratio, which means how much of the revenue from rents is going straight to the loan cost. So Nick, I understand that maybe there's another metric you want to mention, but what's your top three or something from these?
Dan, of these, I like cash and I like people. So I'm going to go with cash on cash. I'm going to go with occupancy and I'm going to go with sponsor record. And right, everybody loves cash flow. Everybody talks about it, right? There's a very popular board game named after it. And I think that's for a good reason. Occupancy, you need tenants. I don't care if it's right, if it's a multifamily, it's a garage, is it people, is it cars, right? You need basically butts and seats to make money. And sponsored record, right? Like I personally have not done a syndication or worked with an operator or a syndicator, but at any point in the future I do, right? You got to trust the team that's behind it.
Mm-hmm. Absolutely. I love that answer. I'm eating it up like a delicious subscribe sandwich. That's another very subtle reminder to subscribe, but it's actually...
Yeah. Is that button down there, Dan? I'm looking for it.
Yeah. Oh, it's definitely it's down there, but don't hurt.
It's down there.
Exactly. But that's also my reminder to pull out the Dan Does Deals Commercial Core Competency Cube with the 6 different roles in a commercial real estate deal. And if you're looking at that and going like, wow, that's the most amazing thing I've ever seen in my entire life. Where can I get one of those? The good news is it's free. You can go to dandoesdeals.com. There's a great big button you can click on to download it. And like a complete dummy, I didn't even ask for your email address, which that's the cardinal sin of marketing. You never give your freebie away without some sort of contact information. But my priority is making sure that you learn how to effectively communicate on the subject of these commercial real estate deals, because regardless of if it's going to be just your investments or if it's going to be part of your career, it's going to hinge on your ability to effectively communicate on it. And when I go through all 6 sides, it also gives a great way to explain how my guest fits into those deals. Let's start with repositioners, which are acquisitions people. They look at a bunch of different properties and they do a bunch of paperwork. They're doing the underwriting, they're doing the math. So engineers are particularly well suited to that sort of thing, say with accountants, finance people in general. But the reason why they're doing all that math is, first of all, they have to figure out, is this property even making the amount of money that the broker or seller is claiming it is? Because, but the reason why they're doing all this and the real skill of being a repositioner is figuring out, how do you find more upside? How do you make this building make more money? Now, one of the less intuitive ways that a repositioner can make the property more profitable is through their community of financiers that they know. These are people who only deal with paper and money and the people who own the place. They don't deal with tenants. They're not GPs or anything like that. And the reason why the repositioners need a vast network of financiers is because if they can secure a more advantageous advantageous loan, that goes straight to the profitability of the building. So they will always know, we always know lots of financiers. But the next place, the more intuitive place that a repositioner is going to look for upside is in the operations. Stop those Benjamins from going down the toilet. But of course, there's more to operations than just unclogging toilets and collecting rent and mowing lawns, shoveling snow for me personally. But the part that is a little bit counterintuitive for some people, me personally, you may know that I'm from the internet. So one of the questions you might ask is like, okay, so Dan goes for apartment complexes of 100 units or more. What exactly is he going to do from far away that is really useful? And the answer is automation and tech. But the bigger one that I find comes in, because when you have 100 units or more, you're usually outsourcing the property management to a third party, and then you're just managing the managers. So it's when do you actually need more non-locals? Well, if you understand that vacancy is the real enemy in this business, somebody on the GP team needs to have some serious marketing chops so that if the units aren't filled, they can step in and get them filled. And that's where I can hop in. But of course, there's only so much you can do for operations. So the next thing that the repositioner will look for is to get a contractor team involved. Yeah, I got a tickle in the back of my throat. But the contractor team, that's to renovate, improve the property in general. The idea being that the next resident would be more than happy to pay more in rent than the previous one because it's a nicer place. But if only it were that simple. You can spend endless money on contractors. You could go ahead and gold plate the toilets if you want, but you're not going to make any money off of it. So you really have to keep a close eye on these contractor teams, which is impossible if you're from the internet, just like me. Sorry about that little pause, but yeah, so the contractor team, they can go ahead and put all this time in, but you have to make sure that they're sticking to schedule, they're not using subpar materials and whatnot. And so if you're from the internet like me, you need boots on the ground, you need the locals, somebody who can be there in an hour or two, because that's not going to be me. I'd have to be stuck at an airport in an hour or two if I have to get there. So you need somebody who lives nearby. But when the repositioner has found the property that they have in mind, let's say it's 350 units and tens of millions of dollars. Actually, let's say that you are the repositioner. You're an engineer or a physician or an attorney, and you get the idea in your head, hey, if my pals and I treated that apartment complex over there like a house, we just show up with the down payment and our credit rating is in good shape. We all throw, like $100K in each or something like that. You might be inclined to turn around the financiers and say, hey, I got this apartment complex that I want to buy. Tens of millions of dollars, 350 units. You have, tens of millions of dollars you want to say, lend us? Well, the financier has one other question that they are going to need the answer to that I haven't said yet. And if you're in a mentorship program or you have a guru, a coach, anything like that, look out for this next one. Pay very close attention. They're going to ask, who's your sponsor? Who's your KP? What's that all about? Somebody in that scenario I described, if you want to be eligible for a commercial real estate loan, somebody in the fold has to already own a similar asset. So in that hypothetical we were talking about before, you and your friends put in your 100K each. Well, you need somebody who already owns a similar asset because the bank is going to want to make sure that you're not going to run it into the ground. On top of that, you need a certain amount of liquidity, and then among the whole ownership team, you need a balance sheet of at least the amount of the loan. But if you have all that, you got yourself a commercial real estate deal. So Nick, you already mentioned that you're getting started. So I imagine it's going to be some local, it's going to be some repositioner. Your engineering side means that you'll be able to, watch capital expenditure for contractors. And then of course, everybody has to have some financier relations roles, but I don't want to put words in your mouth. What boxes do you expect to check in your next deal?
So Dan, you summarized it pretty nicely, but let's talk about the contractor box. I imagine that's probably one of the less common ones you get on the show.
Very true.
So, let me talk about my specialty specifically, parking, right? So Dan, how many times have you seen, a multifamily asset and there's just this garage, right? Huge chunk-in thing, concrete and steel attached. And who has any idea what to do with it? How do they run due diligence on it? How do they plan for capital expenditures, maintenance, restoration? Do they really understand as part of the deal, along with the multifamily asset, like what are they getting themselves into? And in my career right now, that's what we specialize in.
I love that. Yeah, and it makes a lot of sense because most contractors, like they'd be doing houses and things like that. And so if you're just concrete, parking facility, steel reinforced concrete or whatever, it's a completely different approach. So that's a great way of putting it. So let's move on to the buy box. And when people in real estate are talking to each other, saying, "Hey, what's your buy box? What's an ideal property for you? What's easy to say yes to?" We're mainly asking about three things. The first one's geography. Where is it? Which states? Which counties? Possibly even which neighborhood? It's all going to matter. The second one is size. Now, most of my guests on this show are in multifamily, which is apartment complex investing. And the way that you define the size of an apartment complex usually is by the number of apartment units. And the reason why it's important to know that size is because the type of group that will take over a 10-unit apartment complex is fundamentally different from the ones who regularly do 100 plus, 150, and so on. So that size is definitely going to matter. I imagine with parking, it's the number of parking spaces. I doubt it goes by square footage, but it might. You can enlighten me on that one after. But that size is going to matter. The third one, though, I'm going to call it desirability, but the most common term for it in this industry is called class. And the beef I have with the term class is because it's talking about two completely different things and they lump them together. And those two different things are the condition and the area. So when we're talking about condition, it's how beat up is the property? Is it, really nice, or is it really old? Like, when was it built? And then as far as luxuries and amenities goes, is it more or less no frills, or does it have all sorts of nice things like spa and laundry facilities, like all that sort of stuff? So that's the condition. But when you're talking about the area, if you're talking about multifamily, then the school districts are going to be really important to know what those school districts are like, where the property is located. Then the crime rate matters with every type of real estate. But the third part of that is what people call location, location, location. I've never liked that phrase because I don't think it's very informative. I think it's traffic, traffic, traffic. If more people are passing by a particular property every single day, it makes it more valuable. But both the area and the condition are ranked the same way as in grade school, where you have A plus at the top, and then you have A, and then you have A minus, and then you have B plus. So Nick, that parking part, I'm really eager to hear more about, but describe your buy box to the best of your ability.
So, Dan, like I said, just getting started out. I don't know if I can answer that question in completeness or truthfulness. Right now, I've got a small residential portfolio all right here in my backyard, but that's not right. We're here to talk about commercial and not residential today. I can talk about some of the specifics of parking if that's helpful.
Sure, and absolutely. And I could also give you the term that I say, like a lot of people when they're first getting in as a local or a repositioner, because they're so dependent on their sponsor, I like to say that you're deal agnostic. In other words, like you need to, join somebody with more experience and kind of go with their flow rather than being your own path creator. But please tell me more about parking.
Absolutely. So like you said, location's everything. And the whole game behind parking is, right, like we talked about, occupancy rates. How many cars can this garage fit? How many can it fill? How much are you charging per hour, day, week, month, year? What's the condition of the structure? What does it serve? Is it standalone? Is it above grade? Is it underground? Square footage definitely plays a role. Condition, right? Lighting, do your users want to be walking into this thing thinking like they're going to get mugged, or do they want to see as an extension of whatever they're walking to next, right? So again, parking, we kind of call the forgotten asset type, or not necessarily class, but it's super easy to just overlook in advance of whatever it's serving.
I love it. So let's talk about people. My favorite thing about commercial real estate is because there's these different roles. Nobody's going to be all six sides of the die for any meaningful amount of time. They're going to hunker down on one or two of the sides, usually two, but if I'm going to be completely honest, but we all have our own unique skill sets. So that means we need to find the people who we can help disproportionately more. Me personally, because of my tech background, specifically in mass marketing, the automation and whatnot, the sponsors I'm always eager to talk to, simply because they've already got a real estate foundation created. Whereas when you're first starting out as a local or a repositioner, generally you need grunts who are going to put in 120 or some ridiculous number of hours each week, and that's not where I'm at my most effective or my most profitable. So that's not me. But of course, the other ones too is that I'm eager to find more and more financiers as my career goes along. But Nick, as far as you're concerned, you mentioned, right, I usually say don't mention any 506B deals, especially if you're going to mention investors. But if you don't have one, you can go ahead. So who are you hoping connects with you?
So I'm looking to connect either with owners and operators of parking structures, or those who are interested in, right, putting together and buying deals, and they're not 100% sure what to do with the garage or the concrete structure that's attached, right? They probably have a pretty good handle on, hey, buying 300 units of multifamily, here's the class, right? Here's the cost per door. Oh crap, what the heck am I doing as part of my pre-purchase with this freaking garage that's attached, right? And it's a little bit of a niche market, but we help you all the way from, right, the inspection, the engineering, the restoration, and just making it work for you. And on the same side, right, if you're trying to sell something and you need a realistic picture of what this thing is going to look like, we're also happy to offer services there too.
Perfect. So then the question on everybody's mind is how to reach out. Me, I've got this super duper distinct last name. It makes it really easy to find me on LinkedIn, which is where I spend most of my time for social media. And of course, Nick was kind enough to mention some of my books, but I should let you know that if you scan this QR code with your phone, that goes to the FAQs page of 506BME, which is the platform where I offer the IT services of keeping and maintaining your documentation for your substantive investor relations. And the whole idea being that if your laptop falls into the bathtub, your documentation might be destroyed, and the SEC won't really take that as an acceptable answer. So if you want that buttoned up, you can give us a call. But Nick, obviously LinkedIn is how we met, so that's probably a good place. But I don't know if there's a website or phone number, email that's better. How should people reach out?
LinkedIn's the way, Dan. So you've got a unique name, and I've got a simple one, right? Great match. Nick Heim P on LinkedIn. Please shoot me a message. Glad to help you in any way that I can.
Perfect. And then the last part is the public service announcement. It's not for you, Nick, it's for the public. If you've been watching this episode and you've been experiencing searing pains in your eyeballs and like migraine-like symptoms, I'm confident it's because of the downright hideous subscribe button. You can just get rid of it for free. And full disclosure, the reason why I'm drawing so much attention to it is because if enough people click on it, then YouTube will actually start to pay for these videos instead of me. I think that would be amazing. And the trade-off to you, as I said, it's free. It really means that my videos may show up on your list of suggestions on YouTube. That's really it. But honestly, you can go ahead and ignore those suggestions because, frankly, I just really appreciate the fact you spent this time with me. Just like Nick, I appreciate you joining me today. This has been amazing.
Absolutely, Dan. My pleasure. And thanks again for having me on.
Awesome. Thanks. Hey there. Are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506BME or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, and all that kind of stuff. So I hope to hear from you soon. Thanks a lot. Bye. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.